The ECB, the Fed, let the currency wars begin. What's up, everybody? Happy Sunday. It is Bubba's Bottom Line. It is Sunday, June the 23rd. And of course, we had a big week this week. We expected a big move, and we got it. And it all started with our good friend, Super Mario Draghi, who is once again on the warpath to let whatever it takes, we're going to do. We're going to reduce our value of our currency to zero. And of course, follow that up with our good friend Jerome Powell and the Fed. And of course, they want to compete. So they want to continue to destroy the middle class, continue to destroy currency with their great floating fiat currency, and continue to take the money out of our pockets. It's a wonderful situation that we're in. And of course, that is what we're seeing, the race to zero, which basically offers a secondary on the cash that's in your pocket. And I guess it doesn't matter anymore. Of course, that has set, a lot of this has sent the Bitcoin soaring back over 11,000 all of a sudden from nowhere. And of course, we've talked about this quite a bit, saying that we expected a rally. And again, I didn't expect it to go to 11,000 this quickly, nor would I be surprised if there was a sell-off. But of course, the uncertainty of the central banks and the things they can do with their fiat currency, which, once they went up the gold standard, once they took away any backing, these jackasses can do whatever they want, all right? And of course, all they want to do is fight. And you've seen it with China and the renminbi or the yuan, whichever you want to call it, where they're continuing to lower their currency. So everybody's just fighting to get down to zero. Again, I don't know. It just doesn't seem right, but this is the battle that wages on. And of course, the continued battle over interest rates and what they should be. I find it amazing that the credit card debt has exploded and the peer-to-peer lenders are exploding and people are paying very high rates, okay? And who can really get the 3.5% mortgage out there? That's, again, yeah, the guys who can get it are the guys who don't need it, okay? So where is it for the average guy? So where is all this benefit for the average guy on the street, the guy who needs to borrow the money, okay, who can't get access to it? Yeah, he goes to Prosper or Cabbage or one of these peer-to-peer jobbies and pays 11%, okay? So, and then the banks go ahead and buy those loans back and pay it 5 or 6%, okay, and make the spread. Again, it's totally comical that this is what it's become to, where, again, the banks are building the same problems once again because they are chasing down loans that are unbelievable. They're just not chasing them direct to the consumer because they don't want to lend at these lower rates. So they let the outside parties do the damage and do the work, and then they buy the loans later. And of course, we'll see the usual meltdown, the usual problem. And of course, our wonderful people at the Federal Reserve will be behind the ridiculous meltdown that is once again coming, as if we have such a great, strong economy. And again, I'm not saying it's not good. I'm just saying that if everything is as good as they tell us it is, then why is there a need to lower rates? It doesn't strike a logical chord that if we're growing and everything looks good, that we need to cut rates. And of course, I think what you're seeing is freight, global shipping is slowing. Okay, you can blame it on the tariffs if you want. You can blame it on anything you want, but just local freight in the United States, now that can't be blamed on tariffs, is slowing. So you're seeing a slowing of everything, and this is only showing us that we are heading or working our way into a recession. Now again, recessions themselves are part of everyday finance, they're part of everyday world, everyday business. The problem you have is when the people in control of that try to avoid that. This is the flaw in the Keynesian theory. Isn't it easier to let the system work, okay? Let the recession happen and let everybody rebuild and let the weak fail instead of continuing to bail them out. And of course, we know, as you can see by the design of the banks in this system, that they're going to continue to bail out the banks, and they're going to continue to let the big banks get bigger and have the too big to fail label, and continue to crush the small banks. So again, that's again why you're seeing a big pop in gold and a big pop in cryptos, because people are, quite frankly, they're getting A, fed up with it, and B, understand that this is only going to be a bigger problem down the road. Okay, I mean, we saw, and we'll talk more about gold when we get into the markets, but gold, it was at 6-year highs now. We actually talked that gold would go high. And again, I didn't think it'd get the 1,400 in one day, but it did. Okay, but you're seeing a bunch of things that are happening in these markets and that are happening in the economy that are not logical. Okay, and of course, not that we have to always be logical, but the overall the theory behind it, listening to some of these economists talk. Now, I'm not an economist. I didn't even go to school for to be an economist, but I can understand basic common sense. And certainly what I'm seeing is not basic common sense. Again, if you go back to just a straight supply demand, okay, then if there's a lot of supply and little demand, prices should go lower. If there's a little supply and a lot of demand, then prices should go higher. Okay, I mean, the exchange of wealth, the price discovery model would work. But of course, when you try to prevent the recessions and you use the model that we're using here, what really happens is when the recessions do show up, they become all that much deeper. And instead of moving past, okay, and making it a smooth transition and being on your way back to genuine and real growth, you end up in the toilet, okay, with a lot of destruction and a lot of really bad things that then take years to recover from, instead of letting the natural orders work out. Which the first natural order is, if a business or a bank cannot survive, then they should be out of business. I mean, again, how many of you out there, how many of you entrepreneurs out there in business, or how many of you out there that have been in business or maybe had a business go bankrupt or whatever, where was the Fed and where was everybody bailing you out? Where was that free money so that you could pay yourself the bonus, so you could pay yourself and stay in business? Okay. Oh, it wasn't there? Well, probably a good idea. You could probably be right. Okay. If we did some of the things that the big banks and the Fed and some of these other organizations do, we would be either in jail or in bankruptcy court, not getting a bailout so that we could then prosper again and not have to take the loss from the first idiotic decisions that we made. Okay, so again, I have to wonder the logic behind it, and I have to wonder behind the logic of all the economists out there talking about it, because of course they won't tell us about the recession that we're starting now, in my opinion, until 2029. I might be dead by then. Okay. In the meantime, okay, you've got, the way that we report these markets, it's really interesting. I was listening to one of the financial networks. I won't name them yet. One day I'll name everybody, but I'll name names. But I'm listening and I'm talking, the Dow is way up and markets are going to the moon. I look at the tape, okay, and since I'm trading every day, and I go, let's see, the Russell was down about 16 points. The NASDAQ was under pressure, and the S&P was flat. So the Dow was higher. So here they are chirping about how the market's going up. And I go, A, the Dow only represents 30 stocks. B, when the Dow is going higher, that is more of a sign of weakness. Okay, when the Dow is outperforming other markets, that is more of a sign of weakness than it is a sign of strength. Okay, in a true bull market, the leading indices are going to be the Russell and the NASDAQ. okay, especially the NASDAQ. So when you start chirping, and again, please at least report the facts correctly. Let's talk about what the markets are really doing. Let's talk about the underlying parts of the market and what's really going on and what's really happening. Okay, that would be what I would find to be even better. Okay, instead of the usual bull trying to rah rah rah. And again, I have no problem. I like markets when I go up. I'm long the market. I'm always long. Okay, sometimes trading I'm short, but I'm always long generally. I mean, my IRA, my 401k, everything's always long. So again, I love to see the markets go higher, but I do know that there are times when it doesn't. So in the meantime, and we had Slack, which went out new on Friday as a direct instead of IPO. And I always wondered, why would anybody want to go through the investment banking model anyways? I mean, you're paying a fortune to get these investment bankers, and why not take it right to the public? You know, in today's world of social media, there is no problem getting a word out if something is good, okay? So, you know, we've seen two major companies, Spotify and Slack, use the direct method, which means that the company saves about 12 or 15%. Okay, so why wouldn't they want to do that? Again, I don't understand. The old days of the investment bankers and patting each other on the back and taking care of their buddies. Okay, I think it should be just what it was. You take it, you let the market price it out, and bang, you're in business. But what the hell do I know? In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horwitz, and we're going to step out here for a break, and we'll be back with more after the break. Well, everybody, I did another webinar yesterday on the equity portfolio management. Great webinar. We had a great week last week. I don't quote numbers, but trust me, we had a great week last week. We had a great week in the futures portfolios last week. So again, if you'd like to check out those webinars, just email me at bubba@bubbatrading.com. I'll send you a copy. You can listen to it for free. There's no cost. Listen, if you don't want to come, here's what I tell people live when I'm trying to sell it to them. If you don't want it, I don't want you. Okay, I don't want unhappy people. I want people that enjoy it, want to be there, and want to make money. If you want to check out the video, please do email me at bubba@bubbatrading.com. If you'd like to help us out with our high school program, we're trying to rebuild everything. All you got to do is go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with, of course, me. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, it is Sunday, June the 23rd. And, as we talked about last week, we said, we're long, we're staying long. Well, we were rewarded, okay? But we did say that there was going to be a big move, and we weren't sure which way it was. We would assume it to be potentially higher. And we did get a big move higher. Now, why? Well, again, the markets right now want to go higher, and I think that we're so close to new highs that it would be hard not to make them. Okay, so far I believe the S&P has made new highs in the Dow, but I don't think they've made actual highs. I think they made new closing highs. But I think you'll see the rest potentially follow through here. We'll see how it plays out. Number two, you've got the Fed and the ECB both trying to generate. Now, again, why they are both so concerned with the equity markets, okay, when the real player is the fixed income market, another story. But again, you've got the fuel coming in because, again, what's going on is everybody's chasing yield. So we have this chase for yield. So right now, obviously, we're kind of getting on the one boat, right? We're all jumping aboard what's going to be, we'll say, the Titanic at some point in time, because they're not letting you go anywhere else. There are nowhere else to put your money right now. Okay, you want to get under 2% on a 10-year. So right now, everybody is being pushed on to, again, what eventually will be the Titanic for many. Now, again, those who hedge and use what I teach them, it will be actually a welcome sight when the markets do collapse. But in the meantime, okay, we're taking everybody and forcing them here because basically you've got nowhere else to go. So again, markets, we're still long. Okay, again, so we're not changing until our algorithms change. I mean, again, am I thrilled to be long at these levels? No, but again, I don't know better than the algorithm, so let it trade. I think that, you saw what happened in oil. Now, again, we had to reverse in oil. Now, oil was a decent trade because we traded in and out of it. But of course, the last part of it was not so decent. It was rather painful as oil exploded, about 12 or 13% last week. Now, people want to blame the potential, the Straits of Hormuz deals, the tanker attack. Look, I think they caught everybody short. They had a big short covering rally, and of course, that takes you out. Now, we had to reverse and are now long crude. Again, I hate it, but I'm not going to fight it. Okay, I still believe, in my opinion, I believe we're going lower, but based on the math, it says, well, there's still room to go on the upside. And if I'm wrong, then, great. And if it turns around, then I'll get short at the next time. So in the meantime, there's no reason for me to be smarter or try to outguess what I know works to a very high probability. Treasuries, bonds, they continue to go higher. Now, they had a rough, couple of days at the end of the week, but they're in Pluto right now. Again, the 10-year ticked under 2% last week. So bonds and notes, the futures continue to go higher, pushing interest rates lower. And again, is it right? I think it's horrible. I don't know how it keeps happening that way, but I'm not going to step in the way of it. This is one thing you have to learn in markets in general is how to separate fact from fiction, fact from your opinion, market movement from your opinion, and the decisions that you make. Okay, these are all very important things to understand. That you can never play the news. You'll be broke because the news is always well searched out long before it gets to you. Number one. Number two, markets are going to do what the markets are going to do. So instead of trying to tell the market what to do, because telling the market what to do is a sure sign to put you out of business. You have to let the markets do and try to participate with the market with what it's doing, or in other words, follow the money and be with the money. Okay, not that you can't trade intraday against the money based on certain things that you see, but in general, you want to follow the direction of the money. Okay, it's always the same thing. You always follow the money. Okay, now gold. Wow, what a move in gold. Now again, we're long gold. Very nice. It was very pleasant to see. But, did you believe? It was amazing how Thursday night it started ticking up and ticking up and ticking up. Next thing you know, it was up over $40. Next thing you know, it was up over 1,400. Okay, now 1,400 is it? I think now 1,500 comes into play. Now again, I would from a trading standpoint, from a standpoint of trying to get a much bigger rally, I would love to see gold go sideways for a while here, or even pull back a little bit, because I think the up move would be much bigger. Again, we're long, we're staying long, I ain't getting out, okay? But it was a hell of a move, and of course, we identified way back when it was 1310 that it looked like the bottoms had been put in, and again, this is the idea behind understanding how to follow the money, how to read the chart, and how to follow the algorithms, okay? So you put that together, and a lot of times you create very nice, strong winning trades. And we're still in. And of course, the grain markets had a nice week last week. I think the one story here is obviously we've had a dramatic move to the upside. I do believe you should see some selling off in these grain markets in the next couple of days. Now, again, we're very bullish the grains, but I think that from a trading standpoint, a pullback would be much healthier overall. I think a pullback would bring in the play much higher prices, plus the fact that I do think that there's a big market potentially brewing out here. So to me, I think you need to put yourself in a position to, again, we're long, but again, I want to get longer, and I'd like to see a pullback. I refuse to chase them up here. But I think the real key here to watch now is soybeans look like they could be the next big explosion. Corn's gone from 341 to about 450. Okay, that's a hell of a rally. Wheat's gone from 4 to over 5. Okay, soybeans have had a nice rally, but not anywhere near those. And I think you could see the next big move there. Again, I believe that there's a potential big market across the board. We are only looking to be buyers. Again, short term, anything goes. Right? For a day or two, I have no problem. There's times, we get a big spike up and go, and tonight I might sell it for a trade. Okay, but overall, we want to be on the long side. And the meats, have been rather painful. Okay, now cattle itself has not totally violated the bottoms. So, and as we rode over the weekend, okay, they look like they're in the bottoming process. The action in the meats looks very similar to the action that we saw in grains months ago before they broke out. So as long as the cattle, live and feeder, can hold their bottoms, I think you see a much bigger rally from it. We're long and a little bit uncomfortable, but long just the same. But I think you saw something interesting in hogs on Friday, and I think they've broken down. Okay, you know, when you weigh in all the good news that has been in the hog market, and it's not necessarily good news, but the news that should have driven prices higher, okay, African swine flu, all these things that should have driven prices higher, hogs peaked at about $1.10, okay, now they're down at about 80 cents, okay, or 80, whatever, however you want to price it, okay. In the meantime, they look like they could be breaking down, and they're also getting into that backwardation formation, which means that they're getting cheaper into the future, which is never a great sign in the big picture of the world. So we'll see how it looks. Again, there should be some concern there, but we'll see how it plays out. And of course, we did mention the cryptos. Cryptos are taking off. Now, again, obviously, some of that is part of just natural trading, right? We talked about the markets. But again, I think there are many out there that are getting very concerned with a lot of the actions of the central banking systems around the globe and the Federal Reserve and everybody else because of stored value. You have Facebook now trying to get into their own cryptocurrency. And again, they've gotten a lot of approval. They've got a lot of partners. So I think that that's a way. And of course, you've got the banks, even though the big banks give you the old, it's garbage, it's garbage, it's garbage. At the end of the day, I think they've been accumulating, and I think they understand it. And I think they have been dealing with it in their own special way. The same thing they do with the metals. They kind of make it look like it's no good and continue to accumulate at lower prices. So we'll see how that plays out. In the meantime, this week, you know, you've got, you know, a week that certainly could continue to go higher. We're not going to make a prediction. We're long the equities. We're long oil. We're long treasury bonds. We're long gold. We're long grains. We're long meats. Okay. I don't know. I don't have any shorts out there. What am I going to do? I hope I don't get sunburned. In the meantime, again, until they change, that's what we're going to play. In the meantime, we'll step out here for a break, and we'll be right back with my commentary after the break. This is Bubba's Bottom Line. Todd Horwitz. We'll be right back. What's up, everybody? Check out our hedging, or excuse me, my equity portfolio management webinar. If you'd like to check it out, great webinar, great week last week, great couple of weeks, great model, but certainly you can check it out for free. All you do is email me at bubba@bubbatrain.com. I'll be happy to send you a copy. You can listen to it. And also don't forget about our high school program at Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. Let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Horwitz, and each and every week I give you a few minutes or whatever on some of the things I'm pissed off about or whatever. And, you know, I got to tell you, you know, listening to AOC and her talk comparing the border security and the border holdings to concentration camps, I think that is a dramatic insult. I think that is you want to talk about a racist comment, okay? I think, you know, if I happen to be in a family that had some family members in the concentration camps, obviously not me, I was too young, but I mean, I had some relatives with the tattoos, okay? I grew up in a neighborhood where there was many of the people there that had the tattoos, where they were trying to kill people, they were just trying to destroy them, where they were destroying an entire race of people, okay, and the entire Jewish population, among others, okay. So to compare the holding camps on the border where people are trying to cross illegally versus the extermination of an entire people, I think A, is a sad state of affairs. B, to listen to her and Oman and the others, okay, the haters, okay, They talk about the racism. Is this not racism? I would love to see them go into a real concentration camp. We don't have to gas them, okay? But let's let them go to a real work camp and see the treatment that you actually get when it's 20 below zero and you don't get any warm clothes. Let's see not eating. Let's see how it happens. Let's see how they get taken care of, okay, in a real concentration camp, to compare what we're doing on the border to people that are trying to enter this country illegally, okay, versus in the concentration camps where they were trying to wipe out and exterminate a population, I think is an insult. I can't believe that she has not been disciplined for some of her comments, and I think that it's a tragedy that we've got her and Oman and others in our Congress that can get away with the things they say. We should be ashamed of ourselves, and they should be somewhat disciplined for those comments. This is Bubba's Bottom Line, Todd Bubba Horwitz. As always, I thank you so much for being a part of the show. We'll see you tomorrow with Bubba's Daily Update. And in the meantime, everybody have a great Sunday, great rest of your day, great week, and we'll see you on Monday. Bubba's Bottom Line. See you later.